Deputy Charlie McConalogue, 5 minutes, Deputy.
And I would like to join with my colleagues here this evening in supporting this motion put forward by Deputy Michael McGrath. And I think the number of speakers on both sides of the House, both on the government benches and indeed on the opposition benches here tonight, having to share time so much and use such short periods to make their contribution shows the value of credit unions to communities up and down the country. And also, indeed, I think the very large turnout in the gallery here tonight and indeed last night as well shows the value that credit unions are held within, and also is a reflection of the amount of people that are involved in those credit unions and in running them in a day-to-day basis and ensuring that they actually make a real impact on their local economy. I have the privilege here tonight of welcoming a representative from the most northern credit union, or one of the most northern credit unions in the country. I think probably the most northern, Mr. Brian Barr from Foyle Credit Union in Miville, and it's the same right across the right across the country. And the motion that has been put forward by Deputy McGrath suggests some very coherent and sensible approaches and measures that the government could take to actually bolster and ensure that our credit union movement can develop and be strengthened. For example, and just to be clear on what the motion is calling for, it's seeking a review of Section 35 legislation relating to restrictions on rescheduled loans and terms of lending. It's also seeking a streamlining of the process for approval of additional services. And in the last 6 years, Minister, there hasn't been an additional service approved for even one of our credit unions across the country. It's also seeking for a financial analysis to be conducted on the extent of losses incurred by credit unions arising from personal insolvency legislation. Also, for the Central Bank and its consumer protection role to engage directly with credit unions to establish the impact of the current legislation and regulatory restrictions are having on communities. It's asking for the Minister for Finance to bring forward a white paper on the role of the credit union sector within the broader financial services sector in Ireland. In many other countries, Minister, that is the situation. Credit unions are clear on the policy field within which they are operating and how they can develop. We don't have that here, and it needs to actually happen. Also, we are seeking the establishment of an industry-led forum which would have representation from all stakeholders, and in order to examine how credit unions can ensure that they future growth within and across the country. All very sensible suggestions and measures, Minister, and very much needed and required by our credit unions. At a time whenever we see bank branches closed across the country, and indeed some banks leaving the country and withdrawing from the country altogether, the credit unions continue to provide 400 branches across the country and retain and continue to be rooted in their communities. Their local knowledge and expertise and the people that they have involved in each of the credit unions has ensured that they have provided an essential service to their community over the years, and also has ensured that that collective wisdom brought the movement through what was one of the worst banking collapses we have seen internationally. Minister Noonan here in this House outlined, he said, if the credit union movement was one large bank with individual branches, it would have no problems because the good ones would balance the bad ones. Well, I have to say, if it had been a bank, the movement certainly would not have found it in a situation where overall it actually could emerge from the financial crisis we've seen in the last few years in such a healthy state. Minister Noonan went on to say that his advice at that stage in 2011 was that it would cost between 500 million and £1 billion to deal with problems in certain credit unions. The reality has been instead, and it's been established in parliamentary questions put forward by Deputy McGrath, that 35 million, has been drawn down from the resolution fund by way of expenditure relating to incentives for credit union resolution and central bank resolution-related expenses and interest expenses. However, alongside that 35 million that has been drawn down from the resolution fund, in that same time, Minister, there has been income from the resolution fund of €29 million, meaning that the total and net cost of the sector to the country over the last number of years is £6.5 million. Now, if we could only say the same thing about other parts of our financial system, my God, we would be in a very healthy situation. And that is why the measures put forward here tonight need to be taken seriously by the government. They need to be supported. Issues such as caps on savings, Minister, and also restrictions on the type of lending and also new business and products that credit unions can develop need to be addressed. And I would urge that the government adopt this motion tonight.